Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the December 2022 Toronto real estate market update. Well, needless to say, 2022 was quite the year in real estate. We had, it was probably one of the most fascinating years in real estate since probably early 90s. Yeah, we saw quite the uptick in price and volume in the first quarter, and then we saw things really come to a grinding halt thereafter. So, first half of the year was one story up and then down, and then really the last half of the year has been pretty flat, so kind of boring. But that's actually a good thing. I think it's market's kind of stabilizing itself a little bit. Uh, Buyers are getting used to the new interest rate environment, and yeah, sellers are also adjusting to this new market reality. So, anyways, I want to dive into the numbers because we've got some fascinating information that's really, to me, quite interesting, and helps us understand what's happening right now and maybe what to expect in the next quarter in 2023. So sales volume. 2021 was the best December on record, and 2022 was the worst December on record. The last time we had this kind of volume for the month of December was before in 2001. So, anyways, so to show this as a graph, obviously it looks terrible, but if everyone remembers what the real estate market was like in 2021, no surprise that we're seeing this. So what I find more interesting is the sales volume for the year. We had just over 75,000 sales units for Toronto Real Estate Board for 2022. That is the lowest sales volume we've had on record since 2001 for the whole year. And what's even more fascinating is a lot of that volume came in the Q1, first quarter of 2022. So, there's been real slowdown in sales volume. We're seeing that. And I think we're going to see for 2023 a similar sales volume of 75, maybe 80,000, somewhere in that time frame. But I'm not going to give away. I've got a very exciting market predictions video that I'm going to be recording in a couple weeks time. I can't wait to share it with you, but that's a little snippet of where I think things might go in the volume side. I don't think we're going to see a further reduction in sales volume, but that really depends on what's happening with interest rates. So if interest rates stay the same, which I think we're going to see probably a similar rate throughout 2023, maybe rates will start coming down towards Q4 if all things go well on the inflation front and the Bank of Canada is able to tame things. But only time will tell. It's too early for us to say right now. Inflation is still really high. It's a problem, and the Bank of Canada knows that, and they're doing their best to slow things down. So, but we're going to keep tabs on that, and that'll obviously play a huge, huge factor of what happens in the market this year. Okay, active listings. So active listings, unsurprisingly, are up 169%. Don't pay too much attention to the percentage. But if you remember last year, sales volume or sale active listings was at a extreme low. We were at like an ultra sellers market, and now we've got a buildup of inventory, and that's what happens. So what happens when you've got sales volume decrease and active listings increase? You've got a average price reduction, which we've seen. So I'm going to get to price in a moment, but what I want to share is that that for the fact that the sales volume has decreased as much as it has, and the active listings has increased as much as it has, one would think that the market would be in greater imbalance when it comes to buyers and sellers. Don't get me wrong; it is a buyer's market, but it's not massively tilted to buyers. It is still somewhat balanced. And again, it depends on where you're looking. Parts of Central Core, downtown Toronto, are still pretty balanced. When we go to the outskirts, when we're talking about Durham region, we talk about York region, Peel, Halton, some of those areas are perhaps a little bit more tilted towards buyers, but that's where we are today. But really, as I said earlier, it comes down to what happens in Q1 with interest rates, and where are buyers coming in with confidence. What's interesting, and I'm recording this in mid-January, we're seeing a little bit of an uptick, more than I would have expected, on some of the showing metrics on listings. And usually, January, I certainly can speak to this. Every year, you've got buyers who are keen. They part of their New Year's resolution or their goals for 2023 is to buy real estate, and so they say, let's start our research in January, and they do that. And so we're seeing a little more than I would have expected, given what's happening in the market the last 6 months. But again, it's only 2 weeks in January. Don't take any of this at face value. But these are some of the numbers that we're seeing on Broker Bay, which is like a software platform that we use to monitor listings, activity, volume, offers, and showing numbers. So, anyways, just some interesting little tidbit that I'm seeing right now with feet on the ground. So new listings are down, which is not surprising. Last year was a seller's market, so I think there were a lot of sellers looking to take advantage of that. So that's perhaps why we saw that difference or distinction in higher sales volume last year, or sorry, new listings last year. But new listings, really at the end of the day, if you're a seller, you don't want to have a new listing come on the market in December unless you have to. Perhaps you're moving for work, or there's a forced sale. But at this point, most sellers who are thinking about making a move, whether that's upsizing or downsizing, are most likely waiting till the spring. So, the December, January, February numbers, we're not going to take too much of a grain of salt or too much weight into those. Really, I want to look at the March, April, May numbers. Those are going to be extremely telling, but we might get a little bit of a snippet in terms of what to expect moving forward in the next couple months. Okay, so average price from December 2022 to December 2021, average price in Toronto real estate board is down 9.2%, which, if anyone has followed these videos and followed what's happened in the media with real estate, obviously there was a big run up in price, which I'll show here in a moment. And then prices came down fairly rapidly thereafter, and really bottoming sometime in July, really. So if you look at these numbers, right, you saw like 7% increase in January, 7% in February. It was absolutely crazy. Like, that just does not happen. That is not a normal market. So that's why I think the market probably corrected as quickly as it did, because we had such a huge run up, like 14.5% were up in the first like 60 days of the year, which is which is just absolutely insane. But anyway, so if you look at what we're seeing here, the graph, and I was saying earlier, like, prices have basically been flat since July. Like, yeah, we have a little bit of a downturn in December. 2.6% is not huge, and that's absolutely normal. Like, almost every December over the last 20 years, we've seen a decline in average price. Virtually every single, I think all but two over the last 20 years. So, like, I was hoping for maybe a little bit of a lesson or a lesser average price decline, but 2.6% isn't that significant in the grand theme of things. But I want to see what happens in January, February. That'll be a great indicator in terms of where we are going for this year, and will set the tone as well. Days on market, unsurprisingly, we're up to 27 days. 27 days, is still, I would consider, a balanced market overall. It's not, I know I've talked about this earlier, but, it's not really like a heavily buyer market. Like, once we're into like the 55, 60 day range, and then, then we're into, heavy buyer territory, and we're not there yet. And I don't think we're going to get there. I mean, obviously time will tell. Interest rates are going to be the big driving factor of what happens this year. Obviously inflation is a huge concern. And the Bank of Canada is working really hard to bring down that inflation rate down to, their target level, which they're saying is in around 3%. So it's going to take some time to get there. So I think we're going to have elevated interest rates like we have now for probably the balance of the year. Like the average 5-year fixed is, I think right now, 4.8 or 4.9%. And the variable rates now, I think, is somewhere around 6.1%. So we're probably going to get another 25 basis points either this month or the next meeting. But perhaps that's it. That's my prediction. I'm not a central banker, and nor am I an economist, but just from what I read and my 2 cents, and just talking to other finance professionals, in the industry, they're telling me that's their thinking, and I think that's probably right. So anyways, this is it for this month. I hope everyone enjoyed this video. I do have a new video coming out in a couple weeks' time, my predictions for 2023. I did one last year. We're going to recount how I did. And also we're going to talk about what I think is going to happen in 2023. It's going to shape up to be a super exciting one. I can't wait to share with you. And as always, any questions, always reach out to us. If you have any questions about your personal situation, or maybe the questions about the market in general, please hit us up on any and all of our social media channels, and I'd be happy to talk to you then. Anyway, thanks again for watching, and we'll see you next month. Bye for now.